What's going on, guys? Little recap time. Finally back. Finally feeling okay. For anybody that doesn't know or isn't in the chat, I was diagnosed with Crohn's disease. I had extreme fatigue here for a couple weeks and wasn't able to stand, barely eat, barely function, barely do anything. The last month and a half, I went from about 238 pounds, 6'4", to 190, like 5 or 6 in just a month. So lost a lot. Kind of an unfun situation, but we are back. We are feeling a little bit better. We are trying to remiss that and get to it. So back to the recap time. So we have a lot to catch up on, actually. So back all the way to the daily chart. So this week, we started with this guy here, this engulfing bearish, right? We had a very, very short sentiment coming into this whole week. And as I told my chat, we've just been waiting for the short. Now, this is pretty obvious with oscillation indicators as we get into a few of the recap points right here. Very similar to the last short we had. We had a very good short week as we had back here. If you don't remember that recap, there's lots of prior videos here. And the oscillation histogram on the back of the MACD, rolling over on RSIs, hot and TTM. So very similar coming into this bearish engulfing. We had volume beats coming in. We had lower high, lower low RSI coming back down to that 50 retrace. We had a beautiful lower wave, way lower than this one, on the TTM, and a crack through the MAC, and again, low histogram to the dark side and follow through. So all indicators oscillating very well through, and that led us to a couple more indicators. So let's get into those. The 30-30, this one from last week, I seen seller volume accumulating. I'm not going to go into too much because these are core fundamentals, but we have these markers right here all telling us shorts we're accumulating. Now, those are volume closes here on the 30-30. And then with our engulfing bearish Fibonacci, we had a perfect over-under of the golden pocket. Now, if you're familiar with our Fibonacci strategies, in between the 50, 38.20 and 50, 61, whatever you're at, doesn't matter. This is the golden pocket, top and bottom. Now, this golden pocket once failed 2 days ago. We had mentioned that we were going to get some selling through after hours through the night because they're not going to do it during big earnings season here through live trading. They're going to wait till after hours. And we did mention that. We got our cross right here, the Golden Cross, Elite System Cross and moving averages. And we had a beautiful breakdown to the 200 as well. So once we lost that 200 simple moving average, 30-30, rolled back down. Sellers have been in control, and the end all be all is right here. Anything under this level, you can see it held support, rising wedge, failure. There's the lower low and straight down. We've been short for the last couple days here, anticipating this move and really killing it. So we do have earnings after hours here, Amazon, Apple. So we're going to kind of see where it opens up tomorrow, but we did get a gap and go to the downside, right? So again, in the faster time frame now compared to the daily, we are back down on like 50 RSI support on the oscillation indicator, which we just went over. And the 30-30, we are getting close to that -1 standard deviation. So here's your lines right here, your standard deviation, the 30-30 regression trend in the middle, +1, -1. And as you notice, the price action is under the -1 on the standard deviation. So technical analysis would prove to be hard to follow through, right? Without outside catalyst like earnings or something else. So when you see setup like this, where you get a really interesting 1618, which we did here today, because if you fibbed out the engulfing red we've been talking about, your first target is going to be that 1618. So this morning, we were pretty amped on a dip buy and long. So if you get into the intraday, we had the 1618 that needed a live trade tag. And what I mean by live is not a tag during pre-market, needs a live tag. And algos do love this play right here. So it came down to the 1618. This was our first short target. So we've been short, remember, days ago from that 50 fib of the engulfing. Came all the way back down. Hit right here. Now it kind of popped back up, and then, like we said, on open, it needs to come back down and flirt here during live trading, not in pre, right? So that's what the data usually proves to be sustainable through the live data, not so much the pre. So it hit the 1618 and then had a bounce point. So we played two different long trades here and here, rolling back up, then sold some calls. Top of the day for me up here. at that pre-market open, saying that it was going to close on the end of the day under yesterday's close, which it did. So a couple little greens there as well. But let's talk a little bit about this back golden level as well. So you see that gold level right there. I have to let this calculate here. TOS takes a minute. So this gold level had a ton of confluence points across the chart, just had a whole bunch of really unique hits where the daily chart was respecting this level multiple times over and over. And as we get into the pre-all-time high dump here from last year, here all the way back, this is what we're talking about. So this gold level right here, it was a prior all-time high, has doji association here, perfect gap association here on the daily. And as we run through some consolidations, I'll zoom in a little bit here for you. On some of these pinpoints, we have some very interesting levels here of this gold level. Now, this gold level not only was the center of a gap, you see, let's shrink that down, looks a little stretched. There we go. See, a lot of these gold level points here, just perfect to the penny highs, perfect to the penny rejection associated with gap, perfect daily over under, broke over, consolidation broke down, opened up right into that level again, big dump candle. There are a ton of points of interest on the daily chart that had to do with this gold level. So this was a level that we had used on the way up and down, both ways. And once the gold level, if we go back to the 30-30 here, was over, right? And now this is where live data compared to pre-data comes in. We never got a back test. Okay, so take a peek at this. Here's this gold level, no resistance tag. Okay, next day, boom, hit it. All right, great. We broke over, but you notice it pulled back down into after hours and pre-market, and we never got a tag on either one of those, right? So now we have a questionable rally. Again, why we were short biased from last week into this week, very simple, for back testing. Algorithms love the magnets and they love to confirm at price levels and moving averages, whether we like it or not. That's how algos act, especially with gaps. We'll go over that last point here in a second. So as this thing moved up from the gold level, remember, break over, no tag all the way up. So on the short side, we were going to get a back test from the prior support back here that it had missed. So we finally came back into this gold level right here as a confirmational level, hit it, and of course bounced. So we were in here early long for these force ups here, just push off of really big support. We had two supports, one from the engulfing Fibonacci, one from a gold level that was extremely important. This created a pocket, okay, of support. And that pocket on support, looking at it at the intraday on a 5-minute, you were looking in between those two lines for support. And what did the market do? Well, one of its favorite things to do, break into fresh lows and go up, right? So broke into fresh lows and went up. And this is exactly what we said was going to happen too, because why? Let's zoom in and show you another non-confirmational tag. We call these sliver gaps. So you can't see it right now. I'll highlight it up here. Here's yesterday's lows, that blue dotted line. There's that high push candle. You notice that it missed. There is no tag right there, right? So when I left my chat today, I said there is an open, no gap fill by pennies. This price action will come down, squeeze all the way back up, probably some more to yesterday's close, then fall back down. We predicted this in chat way before it happened. These are what algos do. Algos have personalities. They do not like leaving sliver gap fills. They do not. So the pre-market low gold level, Fibonacci, and a beautiful fresh low break, right? It loves to scam people. It has to trap those shorts, right? Push up highs, high day, low a day, higher low gone. Here's yesterday's close, and it'll close under that. And we were spot on. So with this little low break into reversal, that scam is a pretty easy one. We love that one. And it's funny because when the shorts get trapped there, if you would be paying attention to my elite systems for volume beats on how to tell who's in control in this market, you would have known that the buyers were in control the entire morning, and it was just waiting to do the reverse. Now, again, the no gap fill to gap fill tags right here were supersede pretty much everything, right? They supersede everything. And let's show you the last trade that I charted out for private members and students. Here was a Fibonacci long off the bottom, okay? So we like to use Fibonacci pulls very specifically to what the candle data is touching. So the moving averages in candles on this 1 minute chart, these candles right here specifically, I want one that has tons of data on it. I want a candle that is crossed through the VWAP in the purple, through the 50 SMA in the red, through the 100 EMA in the green, through the 10 SMA in the blue, so on and so forth. And I want the candle that I choose to be talking to all of those moving averages, okay? So right here, it's one of the best looking candles we have for a pair, and down. So my students know this and how we work here at the 100 Fib. So when something develops like this, we pull from here to here, so we can assume we don't know anything to the right. And as that data evolves, this is how you use your Fibonacci. Pulls back from the 100. Where does it go? The golden pocket, which we just explained earlier in tons of other videos. It's in between the 50 and 38.20 at this point. This is the golden pocket. That is your support and entry, okay? It's your support and entry. Why? Because you have badass risk management, of course. Look at this risk management. If you were to enter here, patiently waiting, or above the 100, we'll go over that one next. This is your stop out, right? 38.20. Me, I got a little bit wider stops. I wouldn't have stopped out until I probably got a fresh low. But a lot of people for these scalps and, get the big ones, this you could easily use the 38.20 on this one. So if you started to close down here, and why is that? Well, we have a pretty big low of day support, and we have a grinder coming up here with this Fibonacci. So it's like when you do have that push and it comes back down to the golden pocket, you go long here. You could use a hard open close, which is a candle fully developed under the 447.77. That's the 38.20 1 minute Fibonacci here to do a stop out. Because if not, you're using a buy here, right? So what's your risk? 17 cents. Let's just call it 2 points because futures. This would be 2 points on futures, 20 cents on SPY. So when this goes up, we have a 2, right? And then my target is the 1618 to 11, 12 points. It's pretty good. It's like 5x. So when we come into, where we go here? This Fibonacci, look at this play out. And my students know how to use this. And the secondary trade would have been if you weren't catching this guy into the golden pocket of support long and stopping out at 38.20, you would utilize the confirmation of the 100% because now we're on the top side of the fib, came back, tested that top, mounted, target 1, follow through, waits for the moving averages to catch back up. Look at the bullish trend. 50 goes over the 100, starts to spread out. Moving averages are starting nice. What does the price action do? Completely sideways, right? Waiting for what? Moving averages to catch back up. Caught the 50 and boom, right to target 2, which is the 2618. So that trade right there, very, very, very nice. You would have had a great bottom catch. And again, we were guaranteeing, I don't like to use that word a lot, but guaranteeing that yesterday's lows right here was going to get tagged. So you had a lot of really good sequencing here on the bottom, oscillation on the bottom here as well. Once it pivoted into the top channels, it was going easily. What I mean by that is the oscillation. So last little confirmation to look at that trade here. You're going to see that low, walking TTM and cross. Boom, right at the 0 line for the MAC. Boom. Sell wave is tiny on TTM and boom, back over the 50. So from here on out, all the indicators were showing you uptrend. You already have your fib. You have target 1, target 2. You could have used yesterday's lows for a guarantee. But regardless, there was a free 8 to 10 points here. There's no way you could miss that one. So 1618 is yesterday's lows. I would have went to yesterday's lows minimum. So you would have had a 2 to 14, right? So tack on a 6x there. And then back up to 2618 would have been 21 points or so. And then again, we were calling for it to close under yesterday's close on option sales, and it did. And everything worked out. And that's about it. So we're going to see where options end up tomorrow and see if we can continue this. Now, as we said, we ended in July. So if you didn't miss it in the chat, we are ending in July green, right? And that was because July historically usually ends good in sentiment in green. August, September provide volatility. So where's our 6? There's our 7. So this little guy right here, green close on the month, right in August, perfectly timed news. First day in August, right? America gets the downgrade. That's a little scary. That's a little knee-jerk. Now, that's kind of like a kicker, right? That's the catalyst we needed because we knew a catalyst was coming. We've seen seller accumulation to the upside. We've seen RSI giving us beautiful divergence here on the daily, where you've seen stock prices go up for 4 or 5 days as RSI lower high and lower low and went down. You've seen TTM starting to top out on a lower high wave. You've seen oscillation cross. All of those things were preloading, right? Seller volume here on the engulfing, loading sells. Everybody's accumulating on sell side right there. Not to mention calls were so out of whack. There were so many calls, 0 puts. Hedgie's got to dump into that too. Big firms, they were selling for, all of July. And when it comes into August and September, we're going to get a volatility pull back down. Well, where we're going to go? Probably back testing some of the gaps that we need to get filled. We did fill one. We got two more on the way down. 1, 2. And these are the only two that I'm kind of worried about. We do have another one here. And even, we might even have one more right here. Yeah. So there's like 4 to the downside. Now, if this whole volatile August, September gets us that low, that's fine by me. I'm probably actually going to buy that. And then coming into the end of the year, then into 2023, 2024, it's going to be a whole new game. So we're going to have to see where we're at. But the general sentiment and why we were shorting, again, end of July, right into the August, perfectly timed news, started volatility. Now, if we can just jerk around back here, we're going to go to 441.89, which is our 2618 and the 50 SMA daily in the next few weeks here. In my opinion, despite what these earnings do, calculatively, the market it has a personality, and despite what they do, it's kind of crystal ball-y, and it's a little cringe to do it. But the earnings, regardless if they spike us up, down, this next CPI coming up, that's going to be that catalyst wave down. And even if the earnings help us down, I think Apple was the one that was cracking here, and not Amazon. I think Amazon was up. So if these earnings do follow through with that and help us, and then into a deadly CPI, yeah, beautiful right here, we will get this crack through August, September. So be short, stay short. We were here for 2 weeks already, waiting for the accumulation, waiting to strike, and we killed it. See you guys on the next one.